Hi, Masterminds. Hope you're all really well. We've had the move that I was hoping we would get. And like we discussed last week and week before, the data was aligning for this contrarian move to the upside. And it came about. And it's always nice to see things follow through when you have a hunch or an inkling. And, the feeling around the entire market was just, all right, we're going to go just grind again back towards the lows. But again, everything was sort of pointing to me that this is the classic kind of sucker in bear trap type move, and we had the spring. So let's maybe decombobulate that move and just go through it and see where we sit, where we might go from here. And I'll also share with you some other items that I do want to just cover off today. Okay, so let's start first of all on the monthly chart. And I'll just make sure I've got all that. Yeah, done. Perfect. Okay, so on the monthly chart, I mean, you can't get too much better than how we're positioned. And I'll just try and just leave it about there. So let's talk about time-wise as well. This blue box, which we've had drawn for a while. I think I've changed color a few times. In fact, let's so everyone can see it a bit better. Let's go yellow. So the extent of this box was the exact amount of time that we saw in 2020 after the halving, before we had the breakout of the range. So think about it as maybe, I think about 19,000, 20,000, that type of region where we cracked through the all-time high ceiling and went off. So obviously we made an all-time high a bit early this cycle, but I'm still really looking at that sort of that ceiling, the area that we're just contending with, a similar area. Now we have had 1, 2, 3, 4, 5, 6 months of just going sideways and really filling out the lows. Wick, big wick, even bigger wick, massive board up candle. I mean, that's what you want to see. This is absolutely huge. Now, just check when this closes. 5 days, 23 hours. If this candle can close green, we're on track, everyone. So I'm just having a look here as well. Stoke RSI has come back to maybe 60 in the midpoint. That's a really good spot for it to have a crossover here, and then we run back towards the highs where we had a huge new impulse, maybe back to 100, 120,000, that type of region, which I feel is pretty much on the cards here, considering that we had the big breakdown, but the market didn't want to accept it and was completely brought back up into the 60,000s. The RSI here is sort of sitting around that 65. Now, generally, I've been doing a lot of work on sort of learning more about the RSI and different strategies, which I'll sort of discuss a little bit here today. But what you really want to see, first and foremost, is an RSI in an uptrending market. You want to see the RSI be above the 50 mark. So right in the middle, right there, you can see the dotted line right here. In an uptrending market, you want the RSI to be staying above it and bouncing off the 50. You never want to lose it. If you lose the 50, we're in a pretty significant downtrend. We're going to have to work out the lows. That's where you can start spotting sort of bearish divergences at the lows over a certain period of time. But on the upside, the RSI is a measurement of momentum. So when it is above 50 and it's up into these zones, it's not always telling you, that, it's in these high areas, so it's going to roll over immediately. No, it just tells you the market is super strong. If you're starting to spot bearish divergences, if you're starting to, triple bearish, all that kind of stuff, well, yeah, that's a pretty good trigger for yourself to go, all right, things are really overheated. You can still use it as, okay, we're up in this section. Generally doesn't last here too long, but as well, it can last, like we've seen for some of these altcoins, it can last in that lower bound, the 20s, the 30s and whatnot, below 50 for a long time, and continuously move back up, hit the 50 or the 20, 30, whatever, and then come back down, sort of like dead cat bounce all the way down. So right now, Bitcoin being above, the middle moving average above 50, when it's in a very severe uptrend, when we're doing this sort of pulse up, consolidation, higher low, about to make the next high impulse, what we kind of want to see is, what it's kind of done here. It ran up into that 75, didn't get into the 90s and the 80s, still could do that. But what we kind of want to see is a pullback to the 70 level, around that mark. Now we got to 65, a little bit lower, sure. But the 70 mark, when you're in an aggressive uptrend, going up to the 90s, back down to 70 bounce for the next high. So that's kind of what you want to see. When we're looking at a lot of these coins that, again, are stuck beneath the 50, we just want to crack the 50 and then use it as a new resistance. So that's the difference that I'm looking at. The extent of this, how low it could go, is probably more down to the 50, but you wouldn't want to lose that. Anyway, let's get back to the monthly chart, because I just love this setup, and it's back above the 60,000. So the monthly looks really beautiful to me. If I just have a look at the moving average, sorry, the MACD as well. Does look like momentum is waning here a little bit on the bull side, but it's not crossing over. It's still quite strong. So we could easily, be printing a kind of similar over here, where you got a couple of these waning strength patterns, and then you get, quite a strong bullish move. Again, to the upside, where you get this sort of move there. But yeah, we'll have to watch the MACD, but really it's kind of a lagging indicator. So seeing this momentum wane, but again, I think we could be seeing one of these green candles about to fire through this region as we head towards almost certain rate cuts. So let's just move on down to I'll get rid of the MACD. I want to go to the weekly. So the weekly for me is fascinating. Now, and it gives you a bit more granularity to it. So you can see here that we're still really much in this quite nicely broadening wedge, or broadening channel, whatever you like to call it. Now, again, if this is a broadening descending wedge, technically 70% of the time these break to the upside. We really are seeing the movement of that to attempt that kind of maneuver. And this break back above that, the 10 EMA, I'll bring the volume up as well. This movement here through break that 10 EMA and the 20 as well is monumental for the short term. So the weekly, we're back above those two. It's exactly what we want to see for short to mid-term uptrending, movements in this market. So closing above these levels, it's kind of like what we had here, but we just didn't have the conviction, and we hit the top, and then we, went through the floor. There is the opportunity we can go, lower again, but right now just play the ball where it lies. We've had 3 taps of the top. We've also had 3 major taps of the bottom, and each time it's just sort of clear that the market wants to push us back into this midpoint for another decision to the upside. And just based on the sort of the fundamental data of the supply shock, supply and demand, the election, rate cuts, you put all that together and you sort of think to yourself, all right, well, if this isn't going lower, it's more than likely they're going to sit still and go sideways, or eventually it is going to rocket up. And when Bitcoin moves, it's breathtaking. So have that in your mind that can only really be here, for a little bit more time. And this is, again, it's tracking almost perfectly within the cycle length of these consolidation periods. Towards the back end of after the halving. We also have a look here on the weekly on the Stochastic RSI. We've had one crossover bottom. One crossover bottom. So each time we've come to these lows, we've got a crossover, sort of low, and then pulse back up. We've had now 3 bottoms on the weekly Stochastic RSI in terms of momentum. So this really has only one place to go now, and that's for another run at this top kind of region. I'm also spotting, and I mentioned it last week, but the beginnings of a strong weekly bullish divergence on the chart here. So price action actually fell lower. You can see this massive wick that went down, with the price action starting to grind, the RSI grinding higher, making these higher lows. And it was minor, but it was there. So there's a minor bullish divergence. I may have said strong there, but I think you can look at it, a few different ways. If I see that on the weekly, I'm kind of like, yeah, I'm like really big on that. And this is also consolidating into this little wedge pattern here. So I think we get a break through this moving average, because right now on the week, like I said, with the RSI sort of analysis there, we've been using that 50, 49, 48 region as support. We don't want to lose that. If we lost that, then we are going lower, into these kind of regions here until we can, get it back above 50 and be really strong again. Because again, RSI is a momentum indicator. We want to be above 50. At minimum, we want to be above 50 for an uptrending market. So a breakthrough here would kind of signal that and also run through. But I love what is going on here in terms of constructive price action. But again, the proof is in the pudding. We are still going sideways, back yet again above 60,000. We're now at almost 64,000. We were at 64,000 this morning. Excuse me. You saw how easy it was when it wants to just pop and pop really hard. Now let's go to the daily. I want to have a look at the squiggles that I did last week. I think I said to you guys, like, beautiful sort of higher low structure is building, and this does look like she wants to crack through and create a high, but we needed some constructive closes in certain regions. Now immediately what I'm seeing here as well, on this break of this support level, we had a bit of an uptick in volume, which is really important to have. So if the volume just kind of meandered and it just got a bit weaker, there was no uptick, then you're kind of like, all right, this is probably a bit of a fake rally. But because there was a little bit of an uptick on the volume there, I really like this. It's minor, but it's a slow sort of process to get the volumes back in the market and a bit of that excitement there. Right now, there's nothing really stopping Bitcoin here. above is where the resistance should come in, and that's, I can't even see my price ticket. That's about 66,000, 65, upper band 66,500. So do expect Bitcoin to sort of consolidate in this region and then move higher, just on these moving averages. But again, there's nothing much stopping it, at least on the daily chart, because it's kind of cracked through that level. This massive candle here, that was a huge signal here. This big pulse through the 10, the horizontal support, the 200, the what was that, the 100. So you can't really get much better than that. I won't lie. It looked really, really great. And I think my squiggles there were those yellow circles where I wanted this thing to close. And you can see I wanted to just at least close it above this horizontal, did, with this big candle, and above the 200. So yeah, really, really like that. RSI on the daily is a little bit easier to see. It is really trying to challenge a breakout here to move higher. Now on the daily, we are well above the 50, which is important, like I said. So yeah, I really, really like how things are shaping up. I don't think I'll go below the daily. Now the contrarian, I'll say the short-term sort of the thinking here could be that once again we have made a lower high. Of course, this is trying to crack through and make a higher high, the first one. And if we do, I mean, the uptrend is there, it's undeniable. But right now we are still in this lower high scenario while we're making lower lows. So that's still a pretty bearish structure. But this is a really constructive move. If we are going to take this on, it's probably going to be here. As well, you factor in the other things around the market as well, with the dollar falling, around about $101, and also gold moving higher. I mean, it is a great scenario for this market. So there was something else I wanted to show you as well here, guys. Liquidation heat map. So this is for futures. Now, futures have taken an absolute battering of late. Now, at this point in time, at this juncture, we see the majority of the heavy levels of liquidations are actually above us. So what got us through that region around the squeezes that we're talking about, that massive candle I showed you that ripped through the 200, that is because a short squeeze occurred where people heavily short the market with that negative funding, and we saw it just rip through those stop loss levels and propel us higher above those important regions. Right now, to me, it still looks like the max pain is above us at around 70,000 would be huge. That's where a lot of people have their stop losses, because you can see here this previous sort of swing high over here, from the swing low to swing high before we had the big dump down. People will have their stop losses above that candle because they shorted the hell out of it and got that really richly rewarded. But if they're still shorting the market from this region, you can see the amount of stop losses that are concentrated in that region. And I think that's around $3 billion worth of liquidations in that level. And that could really give us some fuel. We start to grind into that and make people a little bit nervous. Not only do we potentially get a liquidation and send us to a new all-time high, but we also get the dynamic where people that are shorting, if it's in big numbers, they will try and quote unquote short cover. So they'll try and remain in their short position, but they will immediately buy Bitcoin spot. And that effect they're trying to hedge themselves and try and get out of their short position. But if they're doing that, they're buying the physical spot and they're putting more bidding, into the process. And a lot of people will do that and it'll just rip through. So yeah, really, really fascinating there, that I just wanted to sort of give you guys a bit more of an idea. Let's have a look at some other charts just real quick. So look, these are all trying to move higher, even little old Ethereum, which just so frustrating to watch. But Ethereum has, with that green candle, broken out of this consolidation structure above that blue line. A little bit of a pullback here before it begins its grind up higher through that region. Let's have a look at FBTC. Yeah, that's a bullish divergence, I guess, with a higher low. Apathy and despondency around Ethereum and the FBTC is just out of this world. You will make money on ETH. This is going to have its time in the sun, but yeah, it's a hard one to sort of swallow when you've got something like Solana and others that just perform better. Let's have a look at dominance. Still in an uptrend. It was trying to break down. It sort of caught itself. Now it's moving higher. And make no mistake, rather, if Bitcoin has a go at 70,000 again and moves higher, the dominance of this market will just shift in that shorter term back to Bitcoin. We'll suck the oxygen out of everything, but we start cracking through that all-time high region, alts are going to fly and catch up because they're so far down from where they were when Bitcoin was at that same position, not long ago. USDT dominance is falling. This is what you want to see because Bitcoin dominance is going higher, sure, but the capital, I guess, in stable coins is moving out of the market. So that could be going into Bitcoin, but it also could be going into alts. And we kind of see that here on the total 3. It's definitely going into alts. It's a really big move from, let's say, that low there. It's a 13% move. So a lot of capital, market cap, is going into the total 3. Love that. And it is kind of ready for a breakout here. Now, absolutely have a little bit of a pullback here into these moving averages, but higher. So altcoins are ready and rocking, and it might coincide with Bitcoin doing its thing. Put stacks on your radar. Just continue to have a really, really nice move. Pretty good example here of the RSI sort of dynamic I was telling you. So stacks has had a breakout here, but I would fully expect it to kind of come back just the way it's looking towards a little bit more of the 50. But seriously, in a breakout like it's done above the 100 and whatnot, these pullbacks are for buying. So it comes into these buy zones that we've got for our newsletter. I mean, go ham. The stacks BTC chart, very similar in respects to, I think it looks better against Bitcoin, and stacks has its Nakamoto upgrade firing in 2 days' time. So I expect stacks to do really, really well over this short to mid-term period. But this is a breakout, make no mistake, against Bitcoin. This looks phenomenal. Again, so this is kind of hit, it's about 70. So it's using kind of 70 as a bit of a upwards resistance. So a little bit of a pullback here, maybe the moving average around 50. And up. So again, uptrending market. This is what you want to see. You also want to see when these pullbacks happen towards key levels. You also want to maybe marry it up with that RSI methodology as well, and it will give you a bit of a leg up. Now, Solana, let's have a quick gander. Again, I love this chart. You can't get much better than this. It's trying to, well, it has broken that downtrend. It's now above all the moving averages. It's trying to pull back here a little bit. And there's so much room to run on this RSI. It has to hold above the 50, but a little bit of a pullback here to the 50, bounce, go much, 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 much higher. And this is how it gets to 200 and 250. It's just trying to reload and go higher. I was watching Drift a little bit here. It's trying on the daily, so it's sort of struggling. I wouldn't be surprised to get that going back to 50, maybe come down and sort of test these kind of levels in here, because we did mention that the other day. BNB, how's that going? Because it was looking like, so it's kind of run into that overhead resistance as it should, into these kind of regions, so the sell zones, and now it's coming back. But this is just a matter of time, in my view. FET, let's have a quick look. Massive move, looks amazing, looks phenomenal. Stoke RSI really overextended here though, so that could have a rollover. Ran straight into the 70 level, so maybe a comeback here to 50. Gold still rocking higher, wanting new highs still. The meme coins have been doing really, really well. Got my on PopCat. Once it gets above that 77 level-ish, above that green, that blue line there, happy day, she's off. This kind of looks like she wants to correct a little bit. Anything else there that I wanted to show you? No, it's really just the big 3. Well, let's have a look at SUI as well, because that has been a big one. That's gorgeous. That's sort of the pullback, bounce, big bounce, and now and this looks really strong. See how it's kind of holding above the 50 level? This is kind of what you want to see in that aggressive uptrend where it's trying to break those upwards levels. So don't mind that. Or was there anything else I wanted to show you on the charts? Not really. I think we are, as long as we can crack through, maintain our position, we could be here for a little while longer, but cracking through that 66,000 will put us on like a magnet for those liquidation levels. Also, just wanted to touch on this again. Poly market, we kind of take it or leave it. It's a prediction market around the election. Now neck and neck, 50-50. We saw that RFK dropped out and endorsed Trump, and he dropped out in the sense that he dropped out of all the swing states that matter. So I think it's 10 swing states. RFK is still on the ballot in either heavily red or heavily blue states because he doesn't want to be a spoiler. But what this will do, and if you, again, still as an investor, the preferable candidate is a Trump administration, especially with RFK forming a bit of an alliance around that. So it's kind of like the dream team. But the thing is, in these swing states, RFK is polling in some cases, 5 to 10%. And if this is as tight as the polls are indicating in some of these swing states where Harris might be up by a point or Trump's up by a point, you give him the RFK vote, because what an internal pollster was saying, at least for the RFK team, is saying that they've done some internal polling, that if RFK were to drop out, how many of those votes would swing to Trump? 57% at least. So, tight election, if Trump's peeling off 57% of a 5%, 10%, voting base in those swing states, that puts him in a really strong position. So yes, pay attention to this. It's important because it has effects on crypto. So yes, again, will be fascinating. We also, hearing those dovish tones from Powell as well. So let me just, this is the one thing I forgot. Jackson Hole, have a look. I just want to make sure dates. Yeah, I don't know if it's begun yet, but we saw some comments from Powell over the last few days that have sort of confirmed that they are looking to cut rates. So yeah, a very, very fascinating time that we live in. Kind of another side note, which I do want to just keep everyone aware of, that if we're thinking real big picture macro, I've been seeing a lot of really good content around liquidity and 2008 and where we sit now. And there's a really fascinating case where each time there's been a massive financial crisis, think 2008 and other places, there's always an event, either the year before or a certain amount of time just before, that removes liquidity from the market, or it's a scare that is kind of a portent, a signal about what is to come. Because big falls in the stock market come from big sucks of liquidity from the market, whether it be the housing collapse or whatever. When we think about the Japanese carry trade, this is probably the largest trade on the planet, where again people borrow yen, they go out and buy stocks or whatnot. If that trade, as we saw a bit of a scare this week, if that trade were to, again, quote unquote, stop or unwind, or there's another really systemic shock, but it's much, much worse, which this could really be the trigger for something like that. And it's very obvious at this point, like they've said they've kicked the can down the road and everything's fixed, but how often have we heard that? How often have we heard that something major like this, just don't worry about it, guys, nothing to see here, everything is fine. I'm concerned that this is not the last we've heard of the Japanese carry trade, and it could be the thing that takes down, it's so hyperbolic when you say it like that, but something that causes a systemic crash in essentially every market, stocks, all that. And again, in those kind of moments, you can't do too much to buff yourself against it, but just know in those moments when liquidity just gets completely drained from the market, it causes correlations to go to 1. Now, a fascinating tidbit is the US 10-year yield, the US 2-year yield, a lot of them are at the exact same yield percentage as they were in 2007 before the 2008 financial crash. So there's not a lot of difference. And something happened, as an example, in 2007, oil, there was what was called, I believe it was an oil crisis. I can't remember the exact name, but there's always an event that pulls liquidity from the market to create the conditions where it can, either the treasury market sees up or the capital flies from risk markets. And in 2007, there was an oil crisis where the price of oil, I think, went from double digits to triple digits, and it was quite an extreme move. And if that is the largest commodity item on the planet that's traded daily, essentially 24/7, if you increase that, the price of that by that amount, liquidity has to be pulled from somewhere else to buy that product. And the world still functions around that, but there's a liquidity being moved from one spot to the other spot. And that caused a pretty big drain. And then you had everything else with the housing crisis sort of attached underneath. But again, very, very fascinating that we have as kind of like a liquidity event that gives everyone a bit of an early eye on what might be coming. So just throwing it out there. It's, again, I don't want to be doomerish or anything like that. Absolutely not. And I think Bitcoin does incredibly well through this phase. But I just want to try and help you guys see around a bit of corners. That's something that I'm just concerned about. In the next 12 months, that could be a catalyst for a liquidity drain and liquidity suck from the market. If the yen carry trade goes belly up, everyone gets liquidated that's done the trade essentially. So, and there'll be a mass selling event. Anywho, I hope you've enjoyed this Monday market update. Hopefully the positivity around it is quite refreshing. It's so nice to see sort of the market really respond well, try and get back into a positive uptrend, back above 60,000 and back above 63,000, which is fantastic. So hope you have a wonderful day. Thoughts and comments below, much appreciated. Have a good day, guys. Bye-bye.